Sunday, December 14th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to quickly look at India, how they've joined China in opening up, yes, their pension scheme to gold. Yes, that's really interesting. I know India is a big consumer of physical gold and silver for that matter, and so is China, but this opens up another avenue for gold buying, and I think it's very interesting. And what we're going to do today as well, we're going to go through this article. It came out a few days ago on Bloomberg about the India news, and it's also related to silver. But after we look at this article, we're going to look at some charts of gold, silver, the gold-silver ratio, and the silver S&P ratio, and also the GDX, because this past Friday we saw a bit of volatility in the markets, and there are a lot of people calling tops in gold and silver in the miners, and I think they are. I think they're wrong, and I'll show you why through the chart. Fundamentally as well, nothing's changed, right? They're going to keep inflating the system, left, right, and center. But anyway, this came out. Yeah, a friend of mine told me about this a couple of days ago. I hadn't heard about it. And it says, the article from Bloomberg, December 11th, by Jack Ryan, gold and silver allowed for first time in Indian pension system. So it's not a long article, so let's go through it. India's pension regulator has included gold and silver exchange traded funds as permitted investments for the first time, unlocking about $1.7 billion of potential demand for the precious metals. Yeah, the Indians already buy physical, but this is different because this is in the financial system. This is for their pension. And I think there will be quite a bit of demand for that, actually. But we'll have to wait anyway. But it says, under new guidelines issued on Wednesday, National Pension System funds, India's government-regulated savings scheme, may allocate approximately 1% of their assets to approved gold and silver ETFs, giving investors exposure to the price of bullion. Yeah, to the price of bullion. It doesn't give you exposure to the physical. Gold and silver have enjoyed record-breaking rallies this year, surging 61% and 114% respectively. The move by the Indian watchdog is an indication of the growing acceptance of the precious metals as a mainstream investment asset. Earlier this year, China launched a pilot scheme allowing insurance firms to allocate as much as 1% of their assets to gold, an amount worth more than $27 billion at the time. This is a significant step forward, as it's the first time the Indian regulator has allowed pension fund investment in gold. That was a comment by Kavita Chacko, India research head for the World Gold Council. It reinforces gold's fundamental qualities as an effective portfolio diversifier. India's NPS was introduced over 2 decades ago, overseeing approximately $177 billion in tax-efficient retirement savings for salaried individuals. The country has seen an increasing uptake of financial products in recent years amid a booming stock market that's set for 10th straight year of gains. Why do I think the Indian stock market is booming? Well, the Indian economy is probably doing well. I don't follow it too closely, but I would also say their currency is continuing to get debased. So anything that has value does well. But anyway, it concludes here. India is consistently one of the world's top gold consumers, often ranking second to China with strong cultural demand for jewelry. ETFs have become an increasingly popular way to invest in the precious metal in the country, with nearly 10 million registered accounts and record inflows this year, according to November data from the World Gold Council. You probably know that I'm not really into ETFs, but be as it may, I don't follow the Indian ETFs, but I would have to say that they do have to have some physical to back these ETFs. I know you cannot probably get it delivered or take delivery from the ETFs. But I think this is really interesting, and I wouldn't be surprised in the next few years if this percentage, 1%, is increased to 2, 3, 4, and 5. And especially with the performance of gold and silver that we're seeing. Anyway, let's look at some charts this morning. And yes, I am doing the live stream tonight. I've set it up already. Rafi is going to join me tonight. Clive is not going to be able to join us. But I wanted to look at these charts. First off, I've got the gold chart going back to the late 1990s, and it's a monthly chart, and it just goes to show how bullish it still looks, and I think we need to look at things from a perspective from far away. We can't be concerned about the everyday moves in gold and silver that are going to become more and more volatile, I would say. And it's not because gold and silver are risky and volatile. I think it's more to do with the fact that the currencies, the fiat currencies, they're on their way out and they're becoming less and less valuable. And that's why gold and silver do what they do, because their prices are going to rise a lot more. And of course, there is the speculative element in there of the futures market. A lot of speculators and traders that sometimes accentuate things. But I think it's just an opportunity, if you can, to stack even more physical gold and silver when you get these dips. So now let's have a look at the weekly chart of gold. Well, gold closed just around 4,300, the spot price, and it's the highest ever weekly close. I mean, I hadn't realized that. So for those people out there who are calling tops in gold and silver, I think there are people who never got on board of the precious metals bull market, so they're always trying to find a top, and I think that in of itself is quite bullish. So now let's move to silver. Well, I've got a weekly chart of silver here. And again, it's the highest weekly close on silver. Yeah, we closed off the high, which was the all-time high, was 64.66 on the spot. We closed just below 62, still the highest weekly closing ever. And then gold-silver ratio as well. That's broken through key support, which was around 73, 75. Yes, it got down. It accelerated quite a bit this week. And it came back, which means silver underperformed on Friday. But I don't think we should be concerned about it. We're still below 70 here, as you can see on the weekly chart. I would say the next target is going to be around 62. That was the low back in February 2021. That's when you had the silver squeeze movement, and silver went to $30. And here we are, almost at 65, and we're still below that level. So I think we will test that soon, that 62 level. And then there's another one here that is very interesting. It's silver to the S&P ratio, and that's broken out. I think I spoke about that last week. in one of my videos. We broke through the high from August 2020. Yes, it came off a little bit on Friday, but we closed above that level, which was 0089 back in August 2020. And yeah, we closed at 00907. So now quickly look at the miners, and I'm going to do that through the GDX. So yeah, GDX has had the highest weekly close ever. So there you go, 85.66. Yes, we're off the highs, but markets don't go up or down in a straight line. So yeah, this is a short little video here, just to tell you what's going on here in the markets. As I said earlier, I don't think anything has changed. The central banks need to inflate the system because the debt grows every second. And 2026 and 2027, we're going to have huge amounts of debt that are going to come due. And in this fiat currency debt-based system, a lot of this debt is just going to be refinanced or rolled over because there's not enough money in the world to pay off the debt that the world is carrying. I think it's like over $300 trillion. And yeah, it's a bad situation. And later on tonight, I'm going to talk about the bond market because that's also giving us some really bad signals. And it's not just Japan, it's also the US and German bond markets are not looking good. So with that, I'm going to wish you all a great rest of the weekend. Take care. Bye.